Welcome back. It's time now to take a look at the top business stories. Dubai considering selling assets to private sector. Growing number of Middle East companies using social media reveals survey. And we talked to the regional director of the Abu Dhabi Gallup Centre about Muslim-West relations. Global markets closed lower last Friday over concerns about the economic crisis in Europe. The GCC markets ended mixed today, while the UAE bourses ended lower on the first day of the trading week. The DFM fell by nearly 1.5% to close at 1,659 points. Aramex led the losses. The company's shares were down 4.5%. Air Arabia as well as DO dropped 1.5% each, while DP World dropped 1%. Arab Tech was down 2.25%. MR Properties lost 1.5% and Emirates NBD fell 1.25%. 76 million shares were traded, valued at 106 million dirhams. In the capital, the ADX fell 0.25% to close at 2,749 points. Abu Dhabi Commercial Bank dropped nearly 2%. Aldar Properties fell almost 3%. TAQA gained 0.75%, while Etisalat was up 0.5%. 63 million shares were traded, valued at 95 million dirhams. Dubai may look at selling shares of government-owned companies as part of its restructuring plan following the financial crisis. Top government officials say that they're working on opening up the capital of leading companies to the public. A keen interest being shown in state-linked assets such as Emirates Airline and Dubai Electricity and Water Authority, DEWA. 26% of regular active internet users in the Middle East have joined at least one brand community, while 57% visit official company websites. A company by global marketing media firm across 54 countries, including 10 from the MENA region, reveals that consumers in the region are contributing increasingly to social media websites rather than simply seeking information. It also found that 60% of users in the region are creating new pages on social network sites. The study aimed to help brands build equity, drive sales, and increase consumer loyalty. Experts say that going forward, they are likely to see B2C companies hop into the social media bandwagon, following tech companies who have already had a head start.
The companies who've said, okay, we know social media is important, let's get onto it. So they've started a Twitter account, they've started a Facebook page, and then they're struggling with like 100 fans, and they're like, So that's when they get onto it, nothing really goes to the next level, and then they bring an agency on board. Then the second kind of companies truly, honestly, are not aware of the revolution. So they're the ones who are really hesitating and struggling. And then there are those who've jumped onto social media, even though social media is not a relevant platform for them. I think the challenge is being able to pinpoint who is the one who's going to manage our social media? So who's either the brand champion internally or an agency who's going to take it to the next level? Second, wondering what is the right time to do it? And third, knowing what kind of investment are we ready to put into something that could well be fairly experimental. I think the answer really is for brands in the Middle East to be able to tie in offline and online, which a lot of brands don't do.
GCC markets closed mixed today. Let's check in on those numbers now, starting off with the UAE general indexes. Coming up now, let's take a look at the major international currencies against the dirham, followed by the price of oil and the precious metals. way after the break, we talked to Dalia Moggerhead, the director and senior analyst at the Abu Dhabi Gallup Center, about relations between the West and Muslim world.